It's a big week for South Korean markets with Nvidia, the Bank of Korea and the US Federal Reserve all in focus. With more up next. Hello and welcome to Wednesday's edition of Press Perspective for August 26th here in Seoul. I'm Min Sun-hee. South Korean markets are facing a crucial week with Nvidia's earnings, the Bank of Korea's rate decision and the Jackson Hole Symposium all set to shape investor sentiment. But beyond the daily swings, the bigger question is whether Korea's economy and markets have become too dependent on the global AI and semiconductor boom. For this, I have Professor Song Soo-young from Chung-Ang University here in the studio. Professor, it's been a while since we've had you here. Welcome back.
Thank you for having me.
I also have Steven Borowiec with Japanese weekly news magazine Nikkei Asia with us. Steven, it's great to have you here.
As always, it's nice to be here.
And Steven, we start with you. Let's begin with the South Korean stock market action today, as well as that in recent days.
Well, the market has, I think it's down something like 30% from its peak in June, but there's a lot of moving factors here. There was recently an interesting Reuters report taking a kind of wide-angle view of this, where it really just, I thought, drove home how what's happening in the market in all countries is a reflection of what's happening in the economy. We do talk about the market and then the real economy, but these are not separate things. There's a lot of kind of interchange and a kind of symbiotic nature relationship between the two. But this Reuters report quoted one investor who said that trading came to be seen as the only way to climb a broken ladder, if only by a little. And the ladder in question there was the desire to move up in the world and to accumulate capital and to improve one's standard of living in this quite competitive and increasingly unequal country. And so, I think what's happened in recent months was a lot of what the kids call FOMO, fear of missing out. There was these really stunning rise in the KOSPI as a whole, driven by these two companies, Samsung Electronics and SK Hynix. And there was really a sense that this was like a once in a generation boom. These companies' share prices were just going up and up and up. And so you had people, retail investors who were perhaps not very experienced, perhaps not, didn't know the ropes as well, were maybe not financially in a situation where they had a lot of capital to put up. So they borrowed money, they leveraged, they did what they had to do to get in the market. And as always happens in booms, some people do really well, some people miss out. So some people bought in at the wrong time and then maybe didn't see the kind of returns that they were hoping to. In the most extreme examples, you had people who took out loans, and then because they didn't see those returns, they were left in a scenario where they were paying large amounts of interest on these loans and then not able to pay them back. And that's a pretty grim scenario. So. But I think it's just important to note that, I said earlier that the market is down something like 30% since, I believe, June 19th. In June, the market was way higher than anybody would have predicted. If you had said 6 months or a year earlier that the cost would be well into the thousands of points above where it had been, nobody would have seen that coming. Nobody did see this coming. So I think it's quite natural that there would be some kind of a correction. And, as you alluded to in your intro, Sunny, in the coming weeks, we're going to see some things that will give us some insight into just how much this boom will be continuing and how much we might see more entrenchment. But the fundamental truth just remains that the basics of the Korean economy are still in place. We've seen this boom, but we still have problems with very high housing prices. We still have problems with a lack of jobs for young graduates, a growing divide between rich and poor. So what's happening in the markets can tell us a lot, but there's a lot more to the story.
Right, and speaking about that being a lot more, Professor Song, as I mentioned earlier, Nvidia is supposed to make public its earnings later today. How much does the Korean market now depend on the global AI investment story, if you will?
Direct answer to the question that how much our capital market depends upon the AI from the foreign. Actually is demand for some DRAM and the HBM is clear assurance that for the Korean two tech companies to enjoy the prospect is quite good. But in terms of the Nvidia's performance, as Nvidia is regarded as a bellwether of some AI front leader. So to that regards, weeks ago, actually the report says analysts predicted the revenue growth is almost reached a 90% increase in the second quarter, but profit level is going to be expected to be 75%, 8% of 80%, still strong, but is the tendency still, the performance of Nvidia is slightly weakening, but it is still they earn the positive profit. So to that regards, Nvidia is performance is not good. I mean, not as bad as expected, but expectation was too high, as Steven has mentioned earlier, that the AI investment is like a fringe, but we need to wait and see how it will be played out in the future, because we need some correction. Particularly in Korea was used to be a most too much increase on the capital market, and then we need to in the phase of adjustment.
Right. Steven, I'm going to take on the role of the devil's advocate. If Nvidia disappoints, could that reality perhaps expose how dependent Samsung, SK Hynix, as well as the KOSPI have become on the AI boom, do you think?
Well, with these, that's a bit tough to answer, because Nvidia, I think in this case, if you ask the question like how much will it be taken as an indication, so there's a question how much investors will react and how much they will take this as an indication, and how much it truly is an indication of where the AI boom and where the economy more generally is going. Those are big questions, but accurately or not, fairly or not, definitely when these earnings come out, investors will take that as a fairly strong indication of where demand for AI products is going, if this demand is going to remain robust over the medium or long term. And so that exposes, or that is an indication of just how the Korean economy is not just dependent on this one, it's not just this one company, but Nvidia is acting in this case as a kind of stand-in, a kind of representative for the demand for AI products more generally. Nvidia has been this very big customer of the South Korean companies, particularly SK. And so I've heard in my reporting, I'm not an expert, so it's my job to talk to experts. And whenever I talk to experts about this, the kind of consensus that I get is just a kind of urging to be calm and to say that don't read too much into any kind of quarterly or short-term phenomenon, that on the whole demand for artificial intelligence projects and demand for semiconductors, memory chips, is likely to remain fairly strong. It's not going to evaporate overnight. Companies all over the world are still planning to increase their use and expand their kinds of infrastructure for these products. So we might not see the type of record-breaking boom that we've been seeing for recent months, but I think there's reason to be calm and not read too much into any sort of very short-term phenomena.
Right then, moving forward, Professor Song, how important will the Bank of Korea's rate decision tomorrow, that is Thursday, be for the local currency, the domestic stock market, as well as the broader economy, do you think?
My position is abject opposition to the rising interest rate. The reason is there are several reasons are there, but threefold explanation about the current tendency of the rising yield for the long-term bond across the globally. That is the reason why it was explained as first, because of the supply disruption. This is definitely affect the cost has been increased, and the liquidity should be provided, but because of the supply disruption. The next one is because of the fiscal deficit around the world, particularly in the United States. But actually, I don't think that is a much concern. And the third one is the reason why recently we have seen the yield. Yield is like a rate of return. When you think of the purchase price is given as a present value of the future cash flow, then the rate of return is estimated as an yield. So the yield is getting larger means the current bond price, which was already issued previously, the price goes down. So this is true to not only to the United States, and it is also to UK and other countries. And Korea has shown that actually it was during 2 years ago, it was very low. If 10-year long-term bond yield was very low. But actually at that time, because we anticipate our economic performance is not good, that's why the government needs to decrease the interest rate. But on the other, recent phenomena among the countries across the advanced countries showing the yield is rising is the reason is because the final explanation is the real productivity is increased, which means because of the AI investment, as Steven has mentioned earlier. So this is kind of a French, but clearly there is some kind of increment of the performance and some productivity of the capital that might be reflected. So among the three factors, the last one is most desirable, but it also calls for some kind of concern over the whole economy and the domestic economy, quite particularly in terms of the inequality.
Right then. Beyond national borders, Steven, investors are also keeping a very close eye on the Jackson Hole Economic Policy Symposium for this week. Before you tell us why, could you tell us a bit about this particular symposium as well and its significance this year?
Well, this is the first such symposium led by Kevin Warsh, who's just new in his position at the U.S. Federal Reserve, and he's an appointee of President Donald Trump. And so in reading up on this, the consensus seemed to be that traders are going to be looking for some kind of reassurance from Warsh that he is serious about fighting inflation. And so there's a political element to this in that he is a Trump appointee and inflation is quite high in the United States right now, largely because of the U.S.-Israeli military operation in the Strait of Hormuz and the war with Iran. And so this is all a bit ironic because Trump ran on this platform of saying that he was not going to become involved in wars in the Middle East and he was going to focus his efforts on matters at home. And he was very critical of the preceding Biden administration and the high inflation that took place then. So he's in a bit of an awkward spot where he does not want to openly kind of admit to the problem of inflation. If Warsh gets up at the podium and he says, well, I'm going to direct all my efforts to addressing rising inflation, that creates something of a political problem. So there's definitely a tightrope that he's going to have to walk. I mean, he said earlier that he didn't want to spoon feed the market. That was the term that he used. I mean, I guess what he was getting at there was a kind of allusion to free market principles, the idea that he should just be, in a sort of right-wing American Republican kind of way, the role of the government is to stay out of the economy and to allow market forces to be the deciding factor. So, but at the same time, I mean, inflation is a real problem. And so he's going to have to at least rhetorically signal that he is taking that seriously and he plans to do something about it, but without, drawing too much undue attention to a sticky situation.
Professor Song, I wonder, could a hawkish message from the U.S. Federal Reserve, combined with the high U.S. bond yields that you mentioned earlier, put further pressure on the Korean stock market and its currency?
Actually, the U.S. The bond yield is increased because of that Kevin Warsh and the Federal Reserve Board members have shown some hawkish stance. But in terms of the inflation, I mean the personal consumption expenditure and the core personal consumption expenditure, which was regarded the most crucial, important source of inflation by the Federal Reserve Board, has shown clearly it is is above the target inflation rate, 2%, which has reached the 3% percentage point or something hovering around that. But slightly they show the declining tendency. So that is the problem. So not because of the inflation, as Steven mentioned, because of the fiscal deficit expected because of the too much expenditure spent on the military exercise, the military operation war against Iran by the United States. So that is the primary reason why the yield has been increased, and the bond vigilante is a little bit concerned about that. But next question is whether it will be transferred or conveyed into Korean currency market or in the Korean capital market or currency level. I don't think so, because currency level for the Korean won is right now is 1,300 and the lower level of the 1,400 and hovering around. I predict the declining tendency will continue because purchasing power parity exchange rate is much lower than current level. It's around 851. The same is true also Japanese yen also. But so because of that, I believe the tendency of the currency is not affected much by the potential increase of the Federal Reserve federal funds rate. But I don't expect it will be increased for the next federal meeting. And as I mentioned earlier, I object the Korean interest rate to rise. The reason is because currently U.S. and Korea also, we faced some kind of a gated recession, which means there is in the economy, there is a clear distinction and disparity between some who enjoy the capital market performance and the high level of earnings from the AI investment, such as the digital technology companies. On the other hand, the majority of the people, actually, their earning is not as good as they want. On average, it looks fine, but actually it's not true. So this is called some differentiated recession will take place. Because of that, increased interest rate actually increased the cost of working capital for the small and medium enterprise and for the people's mortgage rate. So that could be a really big burden for the economy. So that is why not only the Federal Reserve Board, but also Korean Bank of Korea should take a very cautious position, but the best one is just continuous current level. So that does not, the difference between the interest rate between the Korea and the US will not be reflected in some kind of interest rate parity, exchange rate, some abrupt increase, depreciation of Korean won. That will not occur in the meantime.
Right. Stephen, keeping in mind what Professor Song has said about the local stock market, do you suppose Korean retail investors are losing faith in their own stock market and perhaps increasingly looking abroad?
I think faith is an interesting concept to apply to a stock market. I mean, anybody who approaches the stock market with faith in mind is going to be probably disappointed because things change so quickly. I mean, if we want to invoke the idea of faith, I mean, customarily Koreans have had a lot more faith in the U.S. market. They've seen the U.S. market as a kind of less regulated place that generally promises higher returns. I mean, and now there's been a ton of conversation in recent months here about ETFs. I mean, gold prices have gone up a lot just recently, and I believe that it's easier. In Korea, buying gold is a bit of an onerous process. There's quite a lot of taxes. And so the old Korean investor mindset of Korea as a sort of undervalued market with weak returns, and the U.S. as a more stable, more promising place with a wider variety of options. I mean, I think that's basically still the case. As we've been alluding to earlier, I mean, we've seen this kind of generational boom here in recent months, and that may be running out of steam. So, but I think the circus might be leaving town, but the basic building blocks are still in place. I mean, I think that the South Korean market is still fundamentally strong in a lot of ways. We have a very kind of reliable policy-making framework that does things fairly transparently. And so definitely retail investors, some people have been spurned and some people have lost money, and they might look to the United States as a more promising option. And that's been the case for a very long time. I don't think that a real basic change has taken place here.
Professor Song, do you suppose the current stock market correction could spill into the consumer confidence or spending sentiment?
Maybe, but I'd like to point out, first of all, the mistake that was committed by the presidential office of Korean government. The reason is they allowed leverage the ETF for the single stock, such as Samsung and SK Hynix. The primary reason is because in Hong Kong, as early as 2026 January or before that, Hong Kong has launched some kind of ETF against the single stock of Korean Samsung and the SK Hynix, and that's why then the Korean government presidential office, the secretary, has been concerned about the outflow of the investment money from Korean market in the Hong Kong market. That's why they allow such as a very volatile ETF-related product. So that is because the Nasdaq is United States and the capital market is very huge. So relatively, they have some capacity to digest and take care of such volatility, maybe. But in Korea, is a small market relatively, definitely. Almost as Samsung and SK Hynix they taken almost a 50% share of the total capital market. So necessarily by nature, in itself, the Korean stock market cannot be as stable as it used to be. So volatility is a really primary concern, but that's why they made a mistake. Some significant collateral damage incurred by the volatility of the recent Korean market is because actually Korea capital market is expected to be listed in the MSCI, Morgan Stanley Composite Index, the global index, but I don't think it will occur anytime soon because too much volatility, it means that capital market is not eligible for the MSCI. Of course, in the United States, the digital tech companies, they have reached almost out of the S&P 500, almost 20% or 80%. And when they include the SpaceX, it's getting larger. And also in September, Anthropic and OpenAI will be listed, or public offering will occur in September. But so U.S. market is getting a little bit more volatile because too much small number of stocks take too large share of the capital market. Necessarily, it is very difficult to find some diversify away the risk, some individual risk. So that's why my concern lies in. So that's why we have to be careful about the allow, such as single stock ETF related and some leveraged even they have. So the leverage occurs because of they make use of the futures and the options to increase actually option and futures actually work as some borrowing money. So that's why we have experienced such a volatile capital market right now. But I hope sooner or later it will be a little bit stabilized, but clearly the individuals, so-called ant investors, they must bear the burden of the loss and damage.
I see. I'm afraid that's all the time we have for this edition. Professor, so on that cautious note, we'll end today's talk. Thank you so much for your time and your thoughts.
My pleasure.
Stephen, thank you very much for your insights.
Thank you.
Right then, for South Korea, the chips are down to more than just semiconductors, and this week could show just how much the economy is betting on the AI boom. That's all from us on this Wednesday. We return same time tomorrow. As always, thank you for watching.